Is this the year that American banks get back on their feet? Joining us for this week's Smith Business Close-Up is Clifford Rossi, Managing Director of the Center for Financial Policy and Corporate Governance. Dr. Rossi, thanks very much for being with us.
Thank you.
Let's start with a status report. How healthy are America's banks right now? And also, while we're at it, why should individuals be concerned about that?
Well, if we currently look at the numbers, the forecasts are that we have about another 200 or 300 institutions yet to fail over the course of the next year or more. So we're not out of the woods by any measure in terms of getting the banking industry back to health. And that's largely because they are still sustaining large loan losses, particularly for residential mortgages. But also the next leg to drop on their balance sheets happens to be commercial real estate loans, which are lagging the residential sector by a bit, but are causing great pain as well in terms of loan losses. So we expect there to be a fair amount of difficulty for the next 12 to 18 months around performance of these institutions as a result of those two asset types.
Well, what do you expect for the pace of bank failures? We've been seeing a handful every week, it seems. Will they continue to be relatively small or mid-sized institutions, or anything bigger on the horizon?
I think they will be confined largely to the smaller size institutions certainly less than $1 billion in assets. Although we may see one or more, a few maybe, that are larger than $1 billion. But in terms of all the headline news around some of the largest institutions, I think we're relatively out of the woods on that, but you will see a number of smaller institutions fail over the course of the next year or more.
All right, so if the industry is constrained by those pressures, what does it mean for individuals looking to get various kinds of loans, or companies that are looking to finance their operations or expansions?
Unfortunately, I think it's going to be tough times for the next 12 to 24 months on that dimension. The Fed comes out with a periodic survey of underwriting standards, and banks are consistently tightening their standards more than what they were just last year or more. So from that standpoint, I would expect on the consumer lending side, borrowers are going to have a tough time securing the kind of credit that they need. I also think that small to medium-sized businesses are going to find it problematic for them to get the kind of financing that they're looking for. For example, just last year, the 4 largest institutions basically declined to lend by as much as $100 billion to small businesses. That's $100 billion that just isn't there to finance these small to medium-sized businesses. And despite all the protestations from the Obama administration, I think it's going to be very difficult unless you are an institution that has a large cash position and has a very good, very strong balance sheet to be able to weather the storm.
Let's talk about the regulatory storm that's on the horizon for at least the big financial institutions. Previous career, you were a chief risk officer at a unit of Citi. The Obama administration is really cracking down or talking about it on the kinds of risks that banks can take.
That's right, and it's a comprehensive overhaul. Both the Senate and the House have their own versions of this banking reform plan, and it covers all dimensions of safety and soundness as well as consumer protection. For example, they're talking about creating a brand new consumer financial protection agency, as well as the Obama administration last week just coming out and announcing some reforms relating to too big to fail institutions around the size of the institutions, limiting that to no more than 10% of total deposits of the total institution, and then that these institutions can no longer trade in such areas as proprietary trading or hedge funds. And you know, the bottom line on this for the consumer, again, or the taxpayer for that matter, is that we do need comprehensive regulatory overhaul for the financial services industry. Some of it was sorely needed from what we just went through in the crisis. Some of it, I think, maybe overreaches in several dimensions and can, in the end, I think, particularly with things like this Consumer Financial Protection Agency, we need to be a little careful that we also don't pass along higher costs to our customers as a result of this, as well as confine the kind of products that they otherwise would have available to them at these times.
All right, Dr. Cliff Rossi joining us from the Smith School of Business. Thank you for your time.
Thank you.